Good afternoon. Let's take a look at an exercise in which we're going to work with three different methods of inventory valuation using the perpetual inventory system. So in this example, they tell us that a company sells many products, but we're looking at only one product. We're looking at the month of March, various information that's given to us relating to purchases and sales during the month of March. They've asked us to calculate the cost of goods sold and ending inventory using the FIFO assumption. They've asked us to do the same under the LIFO assumption, and also to calculate the cost of inventory on hand at the end of the month using the average cost method. So there are three different methods, and I will show you how I would work through this exercise using Excel. So let's start with what I have done over here in Excel. I've created a small chart for myself. The first column has dates. The second column has information about purchases. This is the number of units purchased, the cost per unit, and the amount, which is nothing but the extension, which means units times cost per unit. I have information about cost of goods sold. When I make a sale, I need to know what the cost of the goods sold is under the perpetual inventory method. So in this calculation, I'm going to look at cost of goods sold, not the selling price. And then at any point of time, how much inventory I have on hand and what's the cost of the inventory that I have on hand. So let's start with the first piece of information. On March 1st, my beginning inventory or inventory on hand is 100 units, for which I have paid $55. So I will start out over here by writing the date, March 1st. The units on hand is 100 units. I paid $55 per unit. So the cost of the inventory or the value of the inventory on hand using the first in first out method is $5,500. It's going to be the same for all methods because this is what's on hand from the previous month. The first transaction in the month of March is on the 3rd. It's a purchase. So I'll again write the date. In the purchase columns, I'm going to identify how many units I purchased. I purchased 60 units. I paid $60 per unit, which means the check that I wrote out is for $3,600. I've made a purchase. This doesn't affect sales right now. What it does affect is units on hand. How many units do I have on hand? I have 100 plus the 60. But I'm going to maintain the details because I need the details. So I have a total of 160 units. And how much did I pay for this? So I can just copy information over, and what you will see is I have a total of 160 units for which I paid a total of $9,100. That's a 55 plus a 36 gives me $9,100. On the 4th, I sold 60 units. So on the 4th, I have sold 60 units. What was available for sale? I have 100 and 60, a total of 160 available for sale. 60 are sold. So the question is, which did I sell and what's remaining with me? Using the first in, first out method, I say whatever came in first is what I'm going to sell first. Okay, so these 60 units are going to be costed at 55. So $3,300 is the cost of goods sold. What's remaining with me after this? Of the 160, 60 are sold, which means 100 is remaining, but I need to know how much of this inventory is remaining. Of the 60, 160 are sold, which means 40 is remaining with me. That's from the beginning inventory. That's still there with me. What about the 60 over here that I purchased the day before? All of that is still here with me. So of the 160, 60 are sold, 100 is remaining. Of what was on hand, 3,300 became cost of goods sold. What remains with me is 5,800. This is a dollar amount, the inventory on hand. So as of this date, if you ask me what is ending inventory, the answer is 5,800. But ending inventory is a word we use only at the end of the month, end of the quarter, end of the year. But this is on hand as of this date. Now, on the 10th, I purchased 200 units. So that's fairly easy. I'm going to put this information over here. I purchased 200 units. I paid $65 a piece for this, which means the total amount I paid is $13,000. How much do I have on hand now? I had 100 plus 200, 300, but I want the details. So I copy these two lines over and then I add this line all in this last section, which is inventory on hand. So the oldest inventory is 40 units at $55. That's from our beginning inventory. It's still there with me. Then I have 60 units at $60 and now 200 units at $65. So the age of the inventory is important when we are doing the FIFO and the LIFO methods. What's our next transaction? On the 16th, I sold 90 units. So on the 16th, I've sold 90 units. I have 300 available for sale. Which one am I going to sell? First in, first out. I still need to get rid of this beginning inventory. And then I'm going to dip into this. So if you look at the details over here now, I sold 90 units. 40 are at $55 a piece. 50 are at $60 a piece. Again, remember, this is cost of goods sold. I'm completely ignoring the selling price at this point of time. I'm not looking at that information at all when I calculate cost of goods sold. Once I'm done with this, what do I have left? Of the 300, 90 are sold. So I have 210 left, but I want details again. Is any of this 40 remaining? No, all of that is gone. Is any of the 60 remaining? Yes. Of the 60, I sold 50. So what's remaining is 10 units of that purchase is still with me. And then this 200 which I purchased on the 10th, all of that is still with me. So I have a total of 210 units. The cost is $13,600. On the 19th, I sold another 70 units. So on the 19th, I sold another 70 units. I have 210 available for sale. Which one will I sell? I first take out this 10 and then I get into this. So let's take a look at this, what I have here now. I have 10 at 60 and 60 at 65. What's remaining? Of the 140, if I sold 70, of the 210, if I sold 70, I'm left with 140. And they're all from this most recent purchase. So that's what I have remaining with me over here. 140 at $65 a piece. Let's continue on with what we have over here. I then have another sale of 50 units. Okay. Where will the 50 units come from? Well, I have only one lot over here. So this line is fairly easy. I have 50 units that I sold at that was cost 65. So that's 32 5 50. What's remaining is 90. Well, they're all at 65. So I have 58 50. Then the next transaction is on the 30th. On the 30th, I made a purchase. I purchased 40 units for which I paid $75 a piece. So 40 times 75 is 3,000 is what I paid. What do I have on hand? I have 90 and 40, a total of 130 units. 5850 and 3,000. When you put those together, this is the amount that we have. Okay. Now, at this point, let's go back over here. Under the first in, first out, they're asking you for the month of March, what's cost of goods sold and what's ending inventory. So the first one that I can answer is ending inventory over here. I have 130 units. What they're interested in is the dollar amount, $8,850. What's the cost of goods sold for the month? I did cost of goods sold for each transaction. So if you add up these numbers, put in a different color, add up the cost of goods sold for each of these sales transactions. My cost of goods sold is $16,250. 16,250 is the cost of goods sold. So the two answers that we need, using the FIFO assumption, calculate the amount charged to cost of goods sold for the month of March. The answer is 16,250. Calculate the ending inventory, it's 8,850. Now let's do the exact same exercise. I'm going to skip the average cost for a second, and I'll do the LIFO method to compare and contrast the FIFO and the LIFO method. So at this point of time, we've seen this information, it's here, so I'm going to maximize my Excel and show you what I have here. Regardless of whether I'm using FIFO or LIFO, my beginning inventory information will not change. So let me put that over there. Also, what doesn't change throughout the month is the purchases made. So I'm going to go ahead and highlight these columns over here because this information is not going to change. The transactions that take place, a purchase, why does that not change? I am buying from a vendor. The vendor doesn't care what kind of accounting I do. Whatever invoice they give me, I have to pay that bill. That was agreed upon between me and the vendor. So those numbers, I'm going to put those down here. What is going to change is not the number of units I sold, but what I say is the cost of the sale. So again, let's take a look at what we have over here. This part I'm going to update here. Okay. So on March 4th, I sold 60 units. When I was using the first in, first out method, I said, of these numbers that are available for sale, again, I'm going to highlight those numbers over here. Okay. I have a total of 160 units available for sale. In the first in, first out method, I said, what I'm selling is whatever came into the business first. So the dates are important. Now, in the last in, first out method, I'm saying I sold 60 units. All these 60 came from the most recent purchase. Whatever I acquired most recently, that's what I'm selling. So the entire purchase that I made on March 3rd is what I sold on March 4th. So what's remaining with me? Everything from the beginning inventory is still with me over here. So all of that is still here with me. On the 10th, I purchased 200 units. Again, it doesn't affect cost of goods sold. What I have over here now is 300 units. Now what you will see, again, I'm going to highlight this in a different color so you can see it to show you the comparison between the two. Okay. What doesn't change again is the fact that I have 300 units on hand. Which 300 units I have depends on whether I'm using the FIFO method or the LIFO method. The LIFO method says I have the most recent purchase and the oldest purchase, which is a beginning inventory. That's still with me. The FIFO method said I have some of the beginning inventory. I have all of the recent purchases remaining with me. Now let's get to the sales part. This is where it gets interesting to see how I'm going to do the costing. I sold 90 units, 70 units, and 50 units in the next 3 transactions. So let's do the same thing over here. I've sold 90 units. Which will I sell from? Last in, first out. Obviously from here. Okay, so let me do that part first. 90 units that I sold, the cost is 65. What's remaining with me? Of the 300, 210 are remaining with me. That won't change. That number will stay the same. 210 is remaining with me. But what's the composition of the 210? Last in, first out. That beginning inventory, unfortunately, is still going to sit with me because I have to first sell everything from this 200 before I can get to that 100. So of the 90 that I sold, after I sold 90, 110 is remaining from the 200. So again, what you will see is the 210 number is the same in both places. Let's put in a different color here to show you. The 210 number stays the same, but the composition of the 210 is different in each case. Okay, the next transaction I sold 70 units. I sold 70. I have 100 and 110. Again, which one am I going to sell from? The more recent purchase is what I'm going to sell from. The 70 is all going to come from the most recent purchase. So what's remaining with me? Same story. What's remaining with me is that 100 from the beginning inventory is still with me. And I have 40 units remaining of that most recent purchase on March 10th. The total that I have 140, that has to stay the same regardless of which method I use. The physical units stays the same. It's the cost of the units that's different. On the 25th, I sold another 50 units. Now, I have 140 units available for sale. I'm selling 50 units. Which one am I going to sell? First, I sell this 40, and then I take 10 from here. So the 50 units are comprised of 40 and 10. 40 is the cost was 65, and the 10, now we are finally getting into beginning inventory, it's 55. Okay, so now what's remaining with me? Finally, this 40 is gone, which means all my purchases made in March are gone. And now I'm getting into my beginning inventory in terms of depleting that, which means depleting simply means selling off that. So I have 90 from beginning inventory still sitting with me. Finally, I have on March 30th a purchase. I add the purchase to the inventory on hand, and you will see that I have 130 units, just like I did before. But the cost of these units is going to be different. It's $79.50. Again, for cost of goods sold, add up the cost of goods sold for each of those transactions, and you will get $17,150. Okay, so something to keep note of over here. Let me write this down over here. We have the 1650 and 8850. Add the two numbers up. Okay, that's going to give you 25,100. Let's do the same over here and see what happens. I have 17,150. I have 79, excuse me, I have 7950. Add the two numbers up, and you will get the exact same answer as you did before over here. Okay, so basically what we're looking at over here is this number is cost of goods available for sale. So let me do the alignment correctly here. Okay. And obviously, that's the exact same thing that you had over here, cost of goods available for sale. You assigned 16,250 to cost of goods sold over here, and you said the remaining amount is in ending inventory. Again, that's the same thing that we've done over here, but depending on how we assign the cost of goods sold, which ones we are saying are sold, the dollar amounts that you assign to cost of goods sold and ending inventory is going to be different, depending on whether you're using the FIFO method or the LIFO method. Now that you've visually seen what happens with FIFO and LIFO, let's do the same exercise if I was using average cost. Now I'd like to note something with the average cost. In the average cost, they've told us, using the moving average cost method, calculate the amounts assigned to inventory on hand. They just want ending inventory. They're telling you round average cost per unit to 3 decimal places and final answer to 2 decimal places. So this is not really that tricky. I just want you to pay close attention to how I do the calculations. So again, let's start out with the inventory on hand, 100 units at $55, that stays the same. Your purchases that you made throughout the month, again, that's not going to change. It's going to stay the same all the way through. So let me update this information here after the purchase. Okay, so now this is the key information we need to work on. Okay, so I had 100 units on hand. I bought another 60 units. The 100 units that I had was valued at $5,500. The cost was $5,500. I paid $3,600. So the total amount paid for inventory is $9,100. A total of 160 units. I calculate cost, the average cost as, and I'm going to change this to average cost. Average cost is calculated as 9,100 divided by 160. So 9,000 $9,100 divided by 160 units gives you $56.857. Okay, keep this to 3 decimal places. That's what they've advised you. Keep it to 3 decimal places. The dollar amounts we're going to keep to 2 decimal places. But the cost, the average cost per unit, we're going to keep it to 3 decimal places. I sold 60 units. Okay. Which one did I sell? Did I sell this 100 or did I sell the 60? Well, it doesn't matter. We're just going to take the average cost. You already calculated that average cost and said what it was. So the extension, which is basically 60 times 56.875, will give you 3412.5. What's remaining? 160 minus 60. 100 is remaining. I don't care which of the 100 is remaining, which of the, whether it's from the 60 or the 100, it doesn't matter. The average cost will stay the same, and the value on hand is 9,100 minus this number, or you could do this extension 100 times the average cost and come up with this answer. Now you purchased in the next transaction 200 units at $65 a piece. What do we have on hand? Now let's start with what I have on hand over here is 300 units. How much had I paid for it? Well, the 100 that I had on hand, I'm going with that average cost. Okay. The 1,300, I paid $65 for it right now. What I'm concerned with is what is the new average cost? The new average cost is $18,687.5 divided by 300. Okay, so do your calculation. It's $18,687.5 or $50 or 50 cents, sorry, divided by 300 units. And this will give you an average cost of 62.292. That's the average cost. That's how we came up with the average cost. Now, the next 3 transactions are all sales. And now this part becomes very easy. The average cost of the 90 units that I sold, I already know what it is. I just take that number, multiply it, and I get the answer over here. What's remaining out of 300? 90 are gone. I have 210 remaining. I know what the average cost is from the previous step. And now I'm going to ask you to multiply 210 multiplied by the average cost to come up with this number. The next step, I sold 70 units. Again, average cost stays the same. It's what it is from the line before. I multiply. How much am I remaining with? 210 minus 70 gives me 140. Again, the average cost has stayed the same. No change over there. I sold 50 units. Go through this exact same process. And I recalculate the average cost each. Now, I don't have to recalculate the average cost. Only when you make a purchase, you recalculate the average cost. A sale doesn't affect the average cost. Okay, so when I made a purchase, I affect the average cost. But when I make a sale, it doesn't affect the average cost. Okay, now finally I purchased 40 units. So I purchased 40 units. I have 130 units on hand. I know how much I paid for the units. The average cost from the previous step for the 90 units, I just copy that over. The 3,000 I copied over here. And this would be my average cost moving forward. The average cost moving forward is 66. Why did it jump from 62 to 66? Because the new purchase was that much more expensive. That's why the average cost of this inventory went up. Okay. And for this part of the problem, what were we asked? They want to find out, they've asked us to calculate what is assigned to inventory on hand. So the final answer that they're looking for over here is just this. 8606.28. Again, if you lay this out as a table, visually it becomes a lot easier to see how this is done. This is simple arithmetic calculations. However you find it easy to do your calculations, it's fine by me. Just make sure you keep a track of inventory in the perpetual inventory method. You have to keep a track of this inventory as it goes along. If you're using the perpetual or the periodic, the FIFO, the answers are going to be the same, but LIFO, the answers will not be the same, nor will the average cost answers be the same. But we are focusing on the perpetual inventory, and you've seen, I walked you through how to do the calculations for the average cost, FIFO, and LIFO. Again, over here, if you were asked cost of goods sold, you add up these amounts for cost of goods sold for each of the sales transactions, and you'll have the cost of goods sold. Going back to the exercise here once again, I'd like to focus on one thing. This column that I had ignored when I was doing the exercises, you don't ignore it in real life or even in accounting. Where would this information be used? When you make a sale in the perpetual inventory system, you have two journal entries. The first journal entry will be cash or accounts receivable debit sales credit. For that, you would use this number, the sales number, 60 times 120. The second journal entry is cost of goods sold debit, inventory credit, and those numbers are what we calculated in Excel. Depending on which method you use, your answer is different for each of those journal entries. For the cost of goods sold debit, inventory credit. That's where there's a difference in the three methods. So I hope this helps you as you work through your exercise on the homework problem.